So we're going to have a quick look here. We're going to see, well, what's it like, the short put strategy versus buying the actual stock. So in the middle here, we have buying the stock, and then we have the short put on the opposite side. So in terms of risk, the long stock is a riskier strategy because if you bought the shares, they would cost you 95.66. So in essence, your break even is that it has to be above 95.66. As you could see from the short put strategy, our break even was above 87.56. So this is a big winner over here. Then we said, well, what happens if the share price fell to 91 in terms of profit and loss? If you own the shares, you would be losing 4%. But actually, by doing the short put strategy, you would have made 3.9%. So even with the share price falling, you're going to make money with this particular strategy. If the stock goes to $100 in the next 4 weeks, you'd be up 4.5% on the long stock strategy. Now you'd be still up 3.9% on the short put strategy. So it's slightly less than a long stock. But when I look at my range in terms of what could go wrong, I'd much rather be in the short put strategy. What would our loss be? Let's take it to the other extreme. What would our loss be if the shares dropped to 87.56? You'd be losing $8.10 per share, which is $810. But with the short put strategy, you'd be losing nothing. The downside of the short put is you don't get access to dividends, but by owning the stock you do. So this is a big winner over in this side. And then really this is where this strategy comes into its own. It's the probabilities of success. So you can see here, if you bought a stock, you've only a 50-50 chance of winning. The short put strategies you could see from our trade calculator was at 77%. So we've increased our chances of winning. So everything is stacking up over in this side, folks, for this particular strategy. It's a much better strategy to use than simply buying the stock. So you've learned how to trade with less risk, increase your return on investment, and you can even make money if the share price falls. A very, very good strategy to use.